Okay, recording this video after close of trade Thursday, 29th of January 2015, and I hope you had a great day's trading today. Quite an exciting day, big sell-off, kind of tested the lows, and then big bounce, reversal day today. Want to talk about this critical level 1981 and why it acted like a tractor beam today. But just to say quickly, I'm finding this market since the beginning of the year like a new market. The volumes are decent, the ranges are decent, the speed and smoothness of the market is fantastic. It's really nice trading. It's almost like back to the good old days. I've got to say, during the last third of 2014, I found it tricky. It was kind of unconvincing trend moves backwards and forwards all of the time. It's almost like a changed market. So fingers crossed it keeps on going like this. So let's talk about why we bounced here at 82. We had this tractor beam number 1981, and it was absolutely critical, and here we are on the 135-minute chart of the E-mini. Just a quick recap, this is day session only data, so at ES.D, so day session only on TradeStation. And it's a 135-minute chart because there are exactly 3 135-minute bars in a day session. I think that's 3 times 135 is 405 minutes. And this is why the level was so key. Here you can see support at 1981, the better sine wave support level kind of down here. Absolutely key. And you know, the market kind of sold off really hard and fast first thing in the morning. We had a pretty strong bounce. I'll just show you that on the 1500 tip bar chart. This was the kind of strong bounce that we had after exhaustion, sell and bullish divergence comes in, and that was down at kind of 95, but that was not good enough. We had to get back to 92s kind of down here. And these important numbers, they're like tractor beams, you know, pulling the market into that point. And the reason for it is the pros want to pull it to that critical level, and they've got a plan. You know, they're thinking like, let's pull it to that level, and then we'll load up and the thing just reverses and goes the other way. So now on the 135-minute chart, yeah, going into Christmas time we had all of these Rambo patterns up at the highs, really weak buying, no demand type stuff, but we had this sell-off in the background, all these exhaustion sell kind of numbers kind of down here where we're kind of getting into the 70s, kind of down here at the lows. We have this big sell-off, blue professional down bar kind of comes in. That's not good enough. We don't have bullish divergence coming yet. Another big sell-off, blue professional down bar here at 2060. We sell off. Then the blue professional bars coming again at the lows. This is at 81, bullish divergence kind of comes in, support holds nicely. We rally back, but you can see all the activity after this rally back. It's all amateur up bars at these highs. Doesn't give us Rambo patterns because it's not breaking to new highs, but it's all weak stuff. We get exhaustion patterns with the amateur up bars, bearish divergence comes in, bang. And now blue professional down bars, they hold. This low today was 1982 on the button, and the support was 81. They had a plan to pick it up down there, and then we've rallied all the way back since. So if we go up to the 45-minute chart, you can see it was exhaustion sell, like a V reversal today on the way back. And on the daily chart, now what that means is this resistance level up here at 54.25 is in play. So between now, where we've closed up at 2018s, up to the 50s, that's going to be interesting. That's the level to get through. We punched through there. We're into going for a trend move on the daily chart again, kind of new highs. So that was an important level today at 82.81, and we could see it in the charts just sitting there. What was this low on this time around? That was 84.25, but that support level is 81, and they just pulled it down to that level and then just loaded up. So sometimes I am just a dumb trader. On the weekend I put out a video saying, yeah, don't overtrade, don't be a compulsive gambler. And what do I do today? I overtrade. But I hate being stopped out, and I was stopped out on my second trade of the day, and it was just dumb. I don't know why I was going long at this point. Yesterday we have a big sell down move. Okay. After a sell down, you expect a continuation move. After you have a big rally day, you can expect a continuation move. And the bottom is not in until the professionals come in with exhaustion sell. And pre the open, we had this kind of bearish divergence with blue professional up bars. We had an exhaustion buy on the upside here. Bearish divergence comes in. All of these were saying it's like, you know, we've got exhaustion buys that have failed. We're going to go down and make exhaustion sell. But when this blue professional bar came in, I went long at 29.75 and then just got taken out of my stop. When this thing reached resistance, I was thinking, oh, we're going to bust through into a trend move above this 2000 level above here, because we'd not seen any blue professional bars. No, it just sold down, bang. I just got taken out on my stop there, down at 95.75. And why was I doing that? It's just dumb. But at least I got short kind of immediately, 95.75, on a little bit of jiggery pokery back here, and then rode this thing down and got my stop back and a little bit more. So I was very happy with that. And it was not over until we saw exhaustion sell and bullish divergence comes in. And then we had a little bit of a rally, but still this market was not finished. We had a tractor beam back to 1981, and that's what we did here. U-turn pattern, blue professional up bar, blue professional down bar, bang. At that resistance, we're not in. We hadn't been seeing blue professional bars kind of picking it up at the lows, kind of down here. When we saw that blue professional U-turn happening there, where they're selling that push up, and then they're anxious to sell it down, and we just keep on going until the blue professional bars come in at 82s. Then we're away into kind of breaking into uptrends. On the 4,500 tip bar chart, you can see, you know, how this thing kind of played out. So yesterday, you know, we had an exhaustion pattern at the end of the day, pull back to another dirty end of trend, but then all the blue professional bars coming into those 80s, coming in here, less and less kind of selling going on, bullish divergence patterns, and then we rocket into this uptrend kind of up here. So definitely overtraded it today, but you know, that's okay once in a while. But just dumb move, kind of getting long into that trade. Sometimes get a little bit cocky, and well, it served me right. That's what I'll be looking for, you know, kind of breaking above these kind of 40-50 kind of levels. Takes us into, you know, kind of territory where we're likely to test into those recent highs. But that was an important level at 1981, and they held it. The professionals kind of came in at those lows. So let's see where we go from there. In terms of, you know, overall, I've got a bullish bias, just because, you know, the US dollar is so strong. You know, all the markets around the world are kind of crazy weak, so the market's kind of flowing in. But I don't know, we've had such strong uptrends with last year. I mean, we're going to be playing the ranges for a while, so I don't expect trending moves to last, you know, as long as they lasted in the last, you know, third or half of last move. I've just got a more kind of shorter term bias, you know, just jumping on board for trend moves that last, you know, 2 or 3, maybe 4 kind of days. That's all I'm looking out for. I'm not looking out any further than that. I think that's impossible in this kind of, you know, environment. So there we go. They held it at 81, and let's see where we go from here.